Are you looking for an edge in the real estate investment market? Not sure which markets or market segments offer the best opportunities or which strategies to implement? You've come to the right place. Hosts Eric Odom and Steven Silverman blend decades of combined experience in the Florida real estate investment market, along with their expert guest, covering topics in lending, investment strategies, property management, and development, giving you actionable investment ideas each and every episode you can use to learn and grow, all with a Florida twist. So, sit down, turn it up, and get ready to learn how experienced investors grow their cash flow and achieve their real estate investment goals. This is the Invest Florida Real Estate Show. And now, here's Eric Odom and Steven Silverman.
Hello and welcome to another edition of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. And Steven, the market rolls on and on. I saw in the papers today, both in Orlando and Tampa, there were entitlements on new apartment projects that were coming out. I think there's 6 now in Tampa. They're coming down the pipe, and we all know what's going on down in Miami in the world of multifamily. What do you see happening these days, Steven?
Well, Eric, also in this past Sunday's paper, there were articles on how the prices of housing has risen. And I'm excited to have the next speaker today because he focuses on the metrics of the real estate market. And although we'll talk mostly about single family, real estate is all about rooftops. And so what happens to the rooftops and the single family market ultimately affects the commercial market. So it's important to look there first and understand what the trends are.
Yeah, absolutely. I mean, sometimes one sector will lead another sector, but definitely in the retail world, retail is very as much of a lagging indicator. The developments will follow wherever those rooftops come in. So if we've got rooftop activity, we've got construction activity, we're going to have retail activity. It's important to understand how those trends are flowing. So anyway, we're going to roll right into our next guest, Darren Blomquist from RealtyTrac. And today we are happy to have with us Darren Blomquist from RealtyTrac. Darren has been with RealtyTrac since 2001 and has been instrumental in many facets of the company's business that has transformed into the industry leader as it is today. I believe that RealtyTrac started out on the foreclosure side, and we're starting to learn that RealtyTrac is really expanding their data services. Darren is directly responsible for the creation of the company's U.S. foreclosure market and sales reports, which are cited by thousands of media outlets nationwide. As a matter of fact, Stephen, today it was in the St. Pete Times. And of course, besides the St. Pete Times, including in major news networks, Wall Street Journal, New York Times, USA Today. I mean, you Google Darren Blomquist and RealtyTrac, and he's all over the place. So we're really happy to have Darren Blomquist with us today. Welcome, Darren.
Thank you so much for having me. Glad to be here.
Welcome, Darren. So tell us a little bit about RealtyTrac. We know that you provide foreclosure formation nationwide on a subscription basis, but the business model has been evolving and it's now much more diverse. Can you give us an elevator speech about RealtyTrac? Or
Most
elevator pitch, I'm sorry, not a speech.
Yeah, I would love to. It won't be a speech, but basically RealtyTrac at our core has grown from a foreclosure-centric data company to a more holistic real estate data company collecting all sorts of public real estate data. And really our mission has not changed, but we've expanded the strategies we have to accomplish that mission. But our mission is to empower consumers, corporations, real estate professionals, policymakers with great real estate data to help them make better decisions about housing. And really in the past year, we've greatly expanded beyond just collecting the foreclosure data to collecting all sales deed data, all mortgage data, publicly recorded, property assessor data for 130 million residential and commercial properties nationwide.
So if you're an investor and you're wanting to find homes less than $70,000 that have relatively low mortgages on them, is that something you would be able to use your service to look up?
Absolutely. We have, a lot of people know about our subscription product on the website, which is really more geared toward consumers, obviously, and actually people who are buying homes for themselves, as well as maybe investors who are looking for a few residential properties. But we have really professional grade products, data mining products like what you're describing, to go into our data and be able to pull out a list of either properties or homeowners that are your targets as a business. And so, yes, you can absolutely do that. And then up another level above that, really, we have enterprise solutions for large corporations, for government agencies, to completely license our entire database and to be able to use it for their purposes and in making decisions about the business or making decisions about policy in the case of government agencies.
Yeah, I can certainly understand, not only for investors, but for mortgage lenders or other of industries would be able to use that information to help prospect.
So Darren, just to be clear, you spoke a lot about homes, but you also keep that same data on commercial properties, correct?
That's right. And maybe this is a learning conversation for me, because I need to know, we need to start putting out more reports around the commercial space, because it's obviously a very important space and a lot of people are looking at that. But we have focused with our reports to the press, which is what I deal with on the residential side. But we definitely have the commercial data in there that we're collecting from public records.
Yeah, if you guys can ever solve the mystery of how to crack the corporation inside a Delaware corporation that has all of its corporate names hidden, please have us on the top of the list to call.
Yeah, that's great to know. I mean, we like to solve problems too. One of the issues we encountered early on with the foreclosure data is that the lender names are spelled, those are hard to track down, and that became actually an issue. And we developed a tool that would normalize the lender names. Actually, we kind of pioneered a product that Microsoft had developed to almost an artificial intelligence to try to figure that sort of thing out on the lender side. Maybe we could apply that to the corporation side as well.
Yeah, it's like the Fabergé eggs, one within the other, within the other, within the other. So
and then when you get to the inside, there's nothing there. It's just hollow. Yeah, it's tough on when you're dealing with commercial property, because everything is held inside of a corporation and or 90% of the properties, and you really have to do a lot of digging. If you guys can figure that out, please let us know. How did you originally get hooked up with the RealtyTrac, Darren?
Sure. My background was in journalism. That's what I went to school for, and I was a reporter at a newspaper in Illinois for a couple of years out of college. Moved out to California, and I was looking for a job. And I really stumbled across RealtyTrac through a temp agency, and I thought RealtyTrac would just be a temporary job. I was actually answering phones as a customer service person, and I was the only one answering phones. This was RealtyTrac at that point. This was in 2001. Was comprised of 5 people. I was answering phones. There was a CEO, there was a CTO, there was a chief marketing officer, and there was an IT guy, and there was me. So it was kind of top heavy, but it was a startup. And
Darren's getting coffee too.
You were the CPO, chief phone officer.
Right. That's right. That's what I should have called myself. So anyway, but really, and I did that, and the company was growing by leaps and bounds. We had in 2000 was really when we started collecting the foreclosure data nationwide, not just in California. And so we got on Yahoo, and people were calling out, like crazy, trying to get a hold of this foreclosures information. And then I transitioned in 2005, and not to talk too much about myself here, but we noticed that nobody was talking about foreclosures. That was a part of the housing market that people just ignored. And in terms of trends, and so we started putting out a report, and I was one of the folks who started that up in 2005, and it took off as a foreclosure market became much more of an important piece of the housing market in 2007 and beyond. And I'm still doing that now, and now it's exciting to be able to have a sandbox of all this other data beyond the foreclosure data that we can look at and find trends and identify trends and find things that people may not have noticed. And really what I love about RealtyTrac is that we're not coming at this housing data from with any axe to grind. We're not an industry. We're a for-profit business, but we are we want to just report the data as we see it, basically. And I love that's the freedom I'm given. even if it makes the housing market look bad, that's what we're going to talk about.
Yeah, but super important for investors because they talk about 3 Ds in real estate investing: death, divorce, and destruction. Destruction is part of the foreclosure process, and those are where one person's misfortune is another person's gain. It's an unfortunate part of real estate, but that's life.
So Darren, please give us a 1-minute overview of where Florida is in the Florida real estate market is in terms of foreclosures. And where are they today as compared to where they were a couple of years ago?
Sure. Florida is really in the long tail of the foreclosure problem. This long tail was created originally by all the bad loans that we know about and the loose lending practices. But the problem in Florida has been prolonged by a dysfunctional foreclosure process, sloppy documentation, misguided foreclosure prevention efforts. So we're still Florida is still experiencing this long tail. In April, there were over 21,000 properties in Florida with a foreclosure filing. It was the most of any state. The state had the highest foreclosure rate. The good news is that 21,000 is dramatically down at the peak of the foreclosure crisis. We were seeing close to 50,000 properties with foreclosure filings. And especially when it comes to foreclosure starts, Florida is doing well. We saw 4,200 properties start the foreclosure process in April. That's down 28% from a year ago, and it's actually back to pre-crisis levels. Before, in 2005 and 2006, we were seeing an average of over 7,500 foreclosure starts a month in Florida. So we're actually well below that now. The bad news is
I'm sorry, tell me that again, Darren. You were at 75, and where are you now?
At 4,200.
42. Wow. Okay.
So it's almost half. In fact, we're seeing this in a lot of markets, it's because of the extra tight lending practices, we're finding a new normal. I mean, foreclosure rates are going back below what they were before the housing crisis. And we see that on the foreclosure start side in Florida. Where we still see the problem in Florida is the tail end of the foreclosure process where banks are actually repossessing homes. There were 8,900 of those statewide in Florida in April, and that was actually up 42% from a year ago to a 27-month high. So I use the illustration of a pig and a python. The pig and the python now with the Florida foreclosure issue is really in that final stage where the banks have maybe been, for different reasons, have not finished the foreclosure process and now are finally pushing some of these lingering distressed properties through and foreclosing on them.
So are these what you call zombie foreclosures, where they've just been sitting in and
no
really
man's
not
land?
moving forward?
Yeah, absolutely. I mean, I guess the good news is the banks are, now that we're seeing this increase in actual bank repossessions, those zombie foreclosures should be converted to actually bank owned, and the bank that then would presumably turn around and sell them pretty quickly. The zombie problem is specifically properties that started the foreclosure process maybe 2, 3, 4, 5 years ago, and the bank never finished the process because they had problems with documentation. Maybe the homeowner was fighting foreclosure. There's been a whole cottage industry of foreclosure defense in Florida that's popped up to help homeowners fight foreclosure. But what happens is those properties sit there for years sometimes in limbo, and eventually the homeowner leaves, the property is vacant, and we're showing Florida has more of those than any state. Although the good news is that number is coming down, but as of the end of the first quarter, we show 35,000 of these vacant properties that are in foreclosure in Florida. That was twice as many basically as the second state, which was New Jersey. It had about 18,000 of those zombie foreclosures.
Tell me about cash. Do you guys monitor cash versus mortgage on home purchases? In other words, who's out there buying cash versus taking a mortgage down?
Yeah, cash in the rebound, the recovering housing market we've seen over the last couple of years, we did see really a spike in cash sales, because for one reason, many consumers are very nervous about the residential real estate market, and lending was very tight. So we did see a spike up to close to 40% of all residential property sales were cash sales in parts of 2012 and 2013. We're now down, actually, as of April, we're down to 29% nationwide of properties that are residential properties being purchased with cash. So that's come down. Florida is, not surprisingly, one of the markets, actually the top state in terms of cash sales. We're still seeing, as of April, and this is still an astounding number to me, 53% of all sales were all cash
That's
in Florida.
amazing.
And that's the highest of,
crazy,
of
man.
any market. If you look at metro areas, Miami is, I believe, let me double check that. Actually, Sarasota is at the top, 59%, Cape Coral 57%, and Miami 57%. And I would almost not believe these numbers, but in talking to folks there, this is what's happening. And those numbers are actually even down. It was over 60% in those markets a year ago.
This is really an argument against those folks that say it's a bubble, we're going to bust, it's going to go down the tubes again. When you're buying so much in cash, there's no one to come take the property away from you.
Right. I would argue maybe it could still be a bubble, but it's not going to be a bubble that bursts,
Right, not like it was in
point,
2008, right.
Because, or at least it may slowly deflate as we realize that those properties were, people basically overvalued the properties that they were buying.
Yeah, tell us about flipper activity. You guys monitor a lot of flipper activity in Florida. What's the activity like for the flippers in the state of Florida? And are you really looking at it as a contrarian indicator, or is that where you're seeing that you consider that to be a professional market and they tend to be a little bit more astute on what's going on? What's your thoughts on that, Darren?
Yeah, I think it actually operates as both. There's a flipping in moderation is good, and certain types of flipping can be a very healthy sign of a market. And so we look at several different factors. Flipping overall, to answer your question, is in most areas of Florida and nationwide is on the decrease. There's just less opportunity for these flippers to come in and add value, and home price appreciation is slowing down, and so that is makes it less appealing for flippers. We saw that, let's see here, statewide, Florida had in the first quarter about 3,100, and this is single-family homes flipped, and that was down 25% actually from a year ago. There's a few markets in Florida where we're seeing flipping going up. The one that stands out is Ocala. Ocala, Florida. We saw a 13% increase.
We say Ocala. It's Ocala.
I'm sorry.
well, there are a lot of horses out there. Maybe they getting bigger stable. Maybe we'll call it a stable market.
Oh no! I forgot to warn you, Darren, about the jokes. They're painful, brother. You'll just have to suffer through them.
Lakeland, Florida was the other market, which I think is close to Ocala.
Yep.
They're kind of central Florida, where there's still one of the hallmarks too is where there's still distress properties available for sale, and so we're seeing that. But flipping is down. But one thing, we also track the average days to flip, which is to me an indicator of whether flipping is being done responsibly or irresponsibly. And then we also track kind of what we call the average gross profit, just the difference between the purchase price and the flipped price. We don't know how much is spent on rehab and all of that.
Sure.
And those gross profit numbers are staying steady and very good. And the average days to flip are actually going up in most markets, and nationwide, which is an indication to me we're still dealing with responsible flippers, and that's actually a good thing for a market. But there is certainly a point where I would think flipping could become, we start seeing flips account for more than 10% of all home sales, and we see the time to flip possibly going down to less than, say, 100 days. Right now, the average is 176 days. Those could be some red flags that there's very speculative flipping going on that's not going to be healthy for a market.
Well, before you get into the next question, I want to just have one more question on this, Stephen. The average profit on flips that you mentioned is holding pretty steady. What is that number now on average flips in the state of Florida? The profit.
Yeah, the average gross profit, again, just the difference between the original purchase price and sale price, was $56,000 statewide in Florida. And a year ago, it was actually it's come up. It was $47,000.
Wow, interesting.
Representing approximately just over a 40% return on the initial purchase price.
Well, do you factor in the repair costs into that?
No, we don't. We don't. That's not part of the public record data. We're looking at some companies that we could partner with who track the building permit data. But at this point, we don't do that. No.
Okay, so we've been talking about residential homes. Are there any parallels in the multifamily market in the state of Florida? Can you give us like a 30,000-foot overview of what your perception is?
Yeah, absolutely. And I was able, again, this isn't our bailiwick in terms of looking at we mostly look at residential in our reports, but I did pull some data on the multifamily market in Florida specifically, and the numbers are up. I mean, the first quarter, just looking at sales of multifamily homes as a barometer, we are seeing sales of homes, of multifamily properties, and I looked at both 2 to 4 units and 5+ units, up 7% year over year in terms of the sales of those properties. And I think from a larger perspective, multifamily is a great market to be in because of this shift we've seen in U.S. housing away from home ownership and toward a renter society. And we'll probably talk about that a little bit more. But that's a market I think that we'll continue to see grow.
Well, tell us about we've got some housing starting to come back in the state of Florida. And how would you relate that to the commercial market, say the retail market? I mean, what's happening in the state right now with starts?
Well, yeah, when we have a broker network, we talk to the brokers, and we don't track the data specifically on housing starts, but in talking to a lot of the folks around the state in Florida, that is something that is finally coming back. And talking to we work with Kai's brokerage in Miami area, which is I believe the largest or one of the largest there. And he was saying, he can see 7 cranes out the window of his office there in Miami, right. and the developments are going up. But the impression I'm getting is that it's again, the theme is we're in another kind of housing, definitely a housing rebound, but it's being done more responsibly, and I hope that's true. But one of the things is that he mentioned is that on these new developments, on these new housing starts, and particularly the more urban housing type of construction, if it's not 60 to 70% sold out before they break ground, they're probably not going to actually develop it. There's this very high threshold. They're not building before they actually have buyers. They're building, in fact, after they have a majority of the units sold in some of these developments.
A lot less spec, I think, is the word of the day, I guess now. Huh?
Yeah.
Yep.
I was noticing. As we were talking here, I separated out. If we look at multifamily 5+, that category in Florida is up 15%. So that would indicate, and that was my suspicion in talking to this broker, is that there's a lot of this development that's more dense populated, and the bigger developments going up as opposed to the smaller multi-unit properties. So we see that 15% increase specifically in the bigger unit multifamily as opposed to the 2 to 4 unit.
Okay, so just going back to, we were talking a little bit about flippers, and I was just curious, can you tell us what are the top 3 metro markets for flippers in Florida?
Sure. Well, we mentioned one of them a second ago, Ocala. And I'll try to say it right this time.
Well, there's no right or wrong. There is one way, and there's the Florida redneck way. The redneck way is Ocala.
I guess I'm not I guess I'm not a Florida redneck yet, but that's maybe
you live in California,
thing,
so it's to be expected.
Yeah. So Ocala's number 1, and I rank these based on the percentage of properties in the first, percentage of sales in the first quarter that were flips. And Ocala was at 8% of all homes sold were flips. That's twice the national average. Nationwide, 4% of homes sold were flips. Miami was number 2 with 7.9% that were flips. And then Tampa was number 3, 7.4% were flips.
That's really interesting. How about, do you have a ranking for foreclosures? What would be the top 3 foreclosures markets?
Sure. And this is based on our April data, which just came out last week. Jackson, and we look at foreclosure activity as a percentage of housing units. And Jacksonville is number 1 in April, was number 1 in April. 1 in every 341 housing units had a foreclosure filing in the month. Nationwide, just to put it in perspective, it was 1 in every 1,000. So Jacksonville,
3 times the rate.
Wow. Still.
Yeah. And Jacksonville was actually number 2 in the country, if we want to look at it that way. Atlantic City was number 1, if you're curious on that. But Jacksonville was number 2. And then Tampa comes in at number 3, number 2 in Florida, number 3 state nationwide. And then Daytona Beach actually was number 3 in Florida in terms of the foreclosure rate in April.
So we're still pretty strong on foreclosures, even though we're seeing the numbers drop overall.
Yeah, it's kind of all relative. The foreclosure rates are much better than they were if you compare Florida to Florida, but Florida still has a lot of hot spots relative to the rest of the country because the problem was just so severe in Florida compared to other markets.
Well, let's talk about home ownership rates, because we talk about Florida and what's going on, but there's the economic situation that occurred in 2008 that led to some of this, but there's also some cultural changes that are going on too. So can you talk a little bit about home ownership rates and what that means to in Florida?
Yeah, absolutely. I mean, home ownership rates, I believe, now are at a 20 to 25 year low if you look at the census numbers. And what really, when I look at the numbers, I like to break it down by the age range in terms of home ownership rates. And a lot of people are talking about the millennials, and justifiably so. Their home ownership rate is now at around 36%. If you look at the under 35 cohort that the census looks at, which is 5 percentage points roughly below its historical average. Mm-hmm. And if you extrapolate that out, that comes out to about 5 million millennials who maybe in previous generations would have been homeowners, but have not yet become homeowners. So you have a deficit of 5 million people there. Let's look out, and pretty much almost across every age range, you do have a deficit in home ownership rate, except for the over 65, I believe. The other age range that stuck out to me with a big deficit in home ownership rates was basically Generation X, 35 to 45 in that area. Mm-hmm. The numbers there, if you extrapolate them out, are actually more along the range of 7 million homeowners mm-hmm. who or deficit of 7 million homeowners who otherwise would have been homeowners if we based it on historical averages. So they're even bigger than millennials. And I think a lot of that has to do with the fact that these people, those Generation Xers, were folks who lost their homes. They're recovering homeowners, basically. Mm-hmm. And so that is, I think the big question, especially with those two age groups, is with the millennials, are they ever going to become homeowners? And if so, when? Gen X side, are they going to come back to home ownership and become homeowners again?
It's $1 million question, man, because
it's a permanent lifestyle change.
Yeah, exactly. It's a permanent. And Steven's got some millennial kids, and there's that age bracket of his kids are certainly doing very well in their professions, but they're not purchasing has nothing to do with the financial consideration. It really has to do with lifestyle consideration. So how, no one really keeps those numbers. We don't know if they're ever going to be as robust home buyers as their parents were.
Right. And, there have been surveys that have come out that indicate that a large percentage of them want to have the desire to become homeowners. But I would suspect that we're never going to get back to 69% home ownership rates, which we were at the peak. Mm-hmm. But we'll probably, and we may not have, honestly, I don't know if we've seen the bottom in terms of home ownership rates. Mm-hmm.
It's good for apartment, good for multifamily.
It's great for multifamily, and it's great for, we've seen this whole big industry started of single family rentals as well, by some of the big hedge funds and others. Yeah. And that's, I actually think that's a pretty brilliant strategy, because especially with those, even if the market turns and a lot of those folks become homeowners down the road, that single family home that you're renting can quickly turn into a home that you sell to a homeowner down the road. But the market, it's not going to shift anytime soon. But the way I see it is that there has been, it's more than just about affordability and the numbers and whether they can afford to buy. It's whether they want to buy, and I think we have seen a permanent paradigm shift away from home ownership. That's gonna leave a lasting mark. I see it a little bit like the Great Depression, having a lasting impact on how that generation handled their finances. I think this will have a lasting impact on how this generation handles home ownership. Doesn't mean that they're not going to ever become homeowners, but they'll be much more conservative in doing so.
Well, talking of generations, let's just focus on the millennials. Besides Jacksonville, the millennials don't seem to love Florida much. Can Florida continue to rely on retirees to power the market?
Well, I think the short answer is the retirees are probably a pretty good market to, that's the second biggest generation we have. The millennials are the biggest. But that's still a huge population to look to depend on, and so and Florida's got going for it. It's really one of only two markets I can think of that are highly appealing to the baby boomers and the retirees. And then it's a warm climate, as you well know, maybe sometimes too warm, and it's a market that's relatively affordable. I mean, maybe Arizona is one other market that you could put in that category. So I think that's a good horse to be riding. Now, it's always good to diversify, though, right? And so I think the millennials should not be ignoring the millennials. And I was actually looking. We pulled some data for a report we did a while back on just looking at the census numbers. There are actually some surprising markets where we've seen some, in addition to Jacksonville is one of them, a pretty big increase in the millennial population between 2007 and 2013, basically during the recession. There was actually Duval County had a 17% increase, which is there in Jacksonville.
Right.
And did I pronounce Duval correctly?
You pronounced it Duval. Duval. Yeah, exactly.
Did I get that?
Yeah, you even had the accent down a little bit too.
You can come to Florida now.
Great. I'm welcome there. Above Duval was actually Okaloosa County was the top, which is Fort Walton Beach. Yep. It's a smaller county, I think, but 29% increase we're showing in millennials. And this is, again, based on census data. And then Orange County, then there in Orlando, had a 20% increase. But then also we had Bay County in Panama City, Broward County, Hillsborough County there in your area, and Miami-Dade County. All of those had at least a 10% increase in the millennial population during the recession. And that was, so it's not just, Jacksonville, and I think there's some good signs that some of the markets there are attracting more than just the retirees. Now, that said, it was still the majority of counties that we looked at in Florida did have actually a decrease in millennial population during the recession. So that is happening in the majority of state, but there are a few standouts where we're seeing that those millennials come to.
Well, with the millennials being renters, it was going to be important for the multifamily guys to think about, or not just multifamily, but the single family guys too, talking about what markets are experiencing rent increases. And can you perhaps talk about maybe the top three markets in terms of rent increases in the last year?
Sure. And we're using the HUD fair market rental data for this, but I think it's a great, obviously it's a great source, and they go down to the county level. The biggest, and to put this in perspective, we don't see these numbers change. They're not quite as dynamic typically, even as much as the home prices have been in terms of these rents. And so we're talking about nationwide an average of about a 1% rent increase in fair market rents from 2014 to 2015. The top county in Florida was Citrus County, where we saw a 3% increase in that fair market rent. So 3 times the national average, basically. And then Polk County, Bake County, and Volusia County all had 3% increases in the fair market rents. Brevard, Okaloosa, and I'm probably going to butcher this one, Alachua.
Alachua, baby.
Alachua, I'm so sorry.
Alachua.
I apologize.
That's the home of the fighting Gators, man. That's right. You got to think about
those all had 2% increases in the fair market rents in Florida.
It's interesting. It's really the minors in terms of population, the smaller counties, the ones that are seeing larger increases there. It's interesting.
Yeah, that is interesting. But I think these are fair market rents. They tend to be, on the very conservative side. And it's not to say that you couldn't find rents that are higher than what the HUD considers a fair market rent for a certain market.
So if you were to or buying a single family home right now in Florida, give us a couple of markets that you would target and why. I think that's a tough one, because I've already proven that I'm not a true Floridian through my mispronunciation of markets. But some of the ones that stand out to me, are the Cape Coral market. I almost I'm hesitating to say that because that was a market that crashed and burned got crushed.
It got crushed exactly during the housing bust. But
it got crushed before, a little before that. I remember when the hurricanes came through and just demolished everything. There was just debris all over the place. It was astounding to drive through. Then came the recession, so they got a double whammy.
Well, it wasn't even – the interesting thing about the hurricane that came through, actually they had some of the biggest increases in values because the insurance companies were pumping dollars in there to clean the place up. And then, of course, about the time everything got cleaned up and the prices were just at their absolute peak, it was literally the perfect storm at that point. And that's one of the reasons they got really whacked hard. Yeah.
So, but we, when we look into the numbers, we're seeing a lot of, opportunity there. Mm-hmm. And maybe that is because, I'm thinking from an investor perspective, some of the more volatile and dynamic markets also are those that offer some of the best opportunities. I would say Central Florida, even though it is a stable market, as you say, is a great opportunity as well. A lot of the markets because they're further behind in the recovery.
Okay.
And so if you're looking for somewhere to find that's where you have more upside potential, I think a lot of those Central Florida markets we talked about,
Lakeland, Polk,
Lakeland,
okay,
would be good opportunities. And then lastly, I think you asked for just one, or maybe you said three, but the last one I would say is Jacksonville, because the strength of the Millennials there, and it's a smaller market that's a little less, a little easier to predict, I would say, than some of those bigger markets like in South Florida. And we hear a lot of some really good things happening in Jacksonville.
And there are good things that are going to happen in Jacksonville. Also with their deep water ports, and there'll be more trade coming with the Panama Canal. But is there anything else like you would like to cover regarding the Florida economy or the real estate market in general in Florida?
Yeah, I've actually just been talking to a lot of people in Florida because there's this issue relating to foreclosures that has to do with the whole statute of limitations. And I think that's just something for investors to be aware of, that the Supreme Court in Florida is going to be, I think, hearing in October, basically deciding how the statute of limitations on foreclosures can be applied in Florida. And that could have a big impact on either way on some of this foreclosure activity as well as lending activity in Florida. But basically 2 different district courts within Florida have ruled differently. Actually, 3 different ones have ruled differently on how to apply the statute of limitations, which is 5 years for foreclosures in Florida. And because of what we talked about earlier with some of this very dysfunctional foreclosure process, it's not uncommon to see a property take more than 5 years to be foreclosed. And sometimes the issue comes up when the case is dismissed and the bank has to come back and start the foreclosure process again, whether they can actually do that. And there have been a couple kind of high-profile situations, one that was highlighted in the New York Times recently, where basically the person ended up with a home for free, who admitted, I have not been making payments on this home for 5 years, and now they own it for basically free and clear. The bank is allowed to keep the lien on the property, but they can't foreclose. And so if that homeowner goes to sell the home, the bank would get
paid,
get paid, but the homeowner basically can continue to live in that home as long as they don't sell it and not have any
that's amazing.
ramifications from. And so if the Supreme Court agrees with the court that said basically that's allowed to happen, then that could have some pretty that could have a chilling effect on the housing market, I think, in Florida. On the other hand, most analysts believe they're going to rule the other way, which is the bank can come back and foreclose. They just can't maybe collect all of the past due payments that they would have otherwise. Basically, the clock restarts, and they can collect fewer of the back payments, but they can still foreclose. So that's one of the, I know that's a little bit of a in the weeds issue, but I think it is something to be aware of that could impact the landscape of real estate in the state.
Hey, man, that's good information, Darren. Listen, if folks are going to want to find you or the research, or how would they get connected with RealtyTrac, how would you tell people to get in touch with you?
Yeah, some great resources, free resources. We're putting out a report a week on the housing market. And if you go to RealtyTrac.com/news, you can read those reports. You can subscribe to get, and there's no cost or anything for it. It's just reports we're putting out to the public. So that's a great resource. Another great resource that's actually free is RealtyTrac.com/Trend Center. And if you go to Trend Center, you can type in any state, county, city, or zip code and get a lot of the information I've been talking about: foreclosure trends, home price trends for that market. And so that's another great resource. And then, of course, we have the subscription product that you can see to get full access to the individual property data. And then in terms of the data mining, if you want to create lists of homeowners who might, or properties that might be good for you to target as a business, that's just mega.realtytrac.com, mega.realtytrac.com. And that's a very popular tool with investors and developers, and that's those sort of folks who really are using the data on a whole nother level in terms of wanting to get direct access to the pipeline of data that we have.
Good stuff, Darren. We really appreciate it. Stephen, is there anything else before we wrap up with Darren here?
No, Darren, I really enjoyed that. I think if people learn to understand, and that by mining the data or looking at the data, they can find opportunities, it'll help with investments.
As we say in the South, data. Darren, thanks so much for your time today. We really appreciate it, and all you do for us is great stuff, man.
Thanks,
Thank you
Darren.
so much.
All right, take care. And that was Darren Blomquist from RealtyTrac. Stephen, it's hard with all the information that Darren gave us for me really to boil it down, but I guess the nuts and the bolts of, I think the primary point I took from him is that Florida was just crushed by the 2008 downturn, and it's gotten a lot better, but it's still near the top of the list of nationwide in terms of foreclosures, which means there's opportunity. There's opportunity. That's really what it means. What did you get out of it, Stephen?
Well, it was so interesting to talk to him because there's a world of information out there, and sometimes there's just too much data. But if you can sort out what is relevant, you have a competitive advantage.
Yeah, absolutely. And just to kind of wrap here, we just like to remind everybody, if you want to find past shows, you can go to investfloridashow.com. We have all of the episodes there. We also have the apps, links to the apps where people can pick up both from Android and from Apple. So we would certainly encourage you. Mobile is the best way to listen to podcasts. It is radio on demand. So go check us out at the website. And Stephen, anything else before we wrap it up for the day?
No, that's it. So see you on the next podcast.
Hasta la vista.
You have just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas and visit our website at www.investfloridashow.com for past shows and tips on how to earn a cash flow in the real estate market in Florida. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only.